So today is all about laying the foundation. It's all about today is all about trying to look at that thing that actually works, and then having confidence to always believe in it, because you have seen it happen multiple times, and then making it something that is habitual. It now becomes part of you. I don't want to spend much time on this live, so I'm going to go straight to the point. First of all, let's look at this trade that happened on Euro GDP. I gave out this signal that was
about 2 weeks ago.
Yes, exactly. So I gave out the signal that was about 2 weeks ago, and you can see what happened. It took a great deal of patience. It almost took me out, and I'm going to tell you guys something that always happens. Just 1 minute, please. I'm going to tell you guys something that always happens in this market. It's all about when it comes to trading, you're fighting so many things. You're fighting the broker, you're fighting the market man, the liquidity providers. You're also fighting your strategy and everything. So sometimes whenever they want to do these things, they always do it at spread hours. Yes, they always do it at spread hours. Spread hours is when the New York session ends into Asian section. That time when the market is dry, when there is no enough liquidity in the market, they tend to widen their spread. So whenever you see this type of thing happening in the market, it always happens during spread hours. So what they usually do is that they have seen that the market is dry, so they can easily see people that are already holding positions. So for them to move the markets, what they do is that they increase the spread, takes a lot of retail traders out, and then eventually price will move in your direction. Like for instance, what happened on CHF-JPY, I took a loss on that trade, but that trade later go in my direction. It was this particular sell that happened here. This sell, let me see if I have that marked out. I don't know if I have that. Okay, good. Can you guys see? Can you guys still see my screen?
Yes.
Good. Mrs. Gibbs, can you hear me? Can you unmute yourself? Is it possible? Can you unmute yourself? Can you hear me?
And when you see gift, does it necessarily have to be a girl?
Oh,
gift that is a guy.
So sorry. There was a lady I was trying to chat with. Are you the one that paid recently for the mentorship?
Oh, me, yes, I paid, but not recently. I paid like 3 weeks ago,
Okay, there's another person I was thinking that it was a lady, because I was thinking that she would join us in this live. Let me know if you are the person, so I'll know how to address, so I'll know that I'm not making mistake in the addressing. The name of the person is I saved the number as let me get that sorted out, because I want to make sure that I'm not having issue. Okay, you are the one that has a picture of a lady and a baby on the profile, right? Hello, sir. Hello,
Me, I'm a king. I'm not gift. I am a king.
Okay, no, I'm talking. There's another person also. I have another person.
Yeah, gift. She's not. The person's not responding yet.
Okay, he's not responding yet. Okay, maybe he or she is having. I want to know if he's a man or a woman, because on the profile picture it's a lady with a child. So I want to know if he's the wife, or probably if she is the person. So maybe she will get. So now what happened here? Like I told you guys that what happened here was it was during spread hours. It was during spread hours. That was 10 p.m. right? So I was God of it. This forex rate is kind of funny. So what they did was to increase their spread. They increased their spread, so I was taken out. And then after that, what happened? Price sold to the downside. So that was what happened on this. So that was what they always do. So now it's not that sometimes it's not that the setup or your analysis is not accurate. It's just that sometimes it takes a great deal of patience for this market to move. So that was what happened on Euro GDP. And because where we place our stop loss is kind of far from the key level, it gave the price enough room to move before that. So now it took it came how many days? Took about more than 7 days. up to more than 7 to 8 days. This is even small of what we. So let's look at what happens. So now, like I told you guys, that what really matters. So at the end of this call, this period, what you need to understand is that, like I told you guys before, is key level is very important. Key level is very, very important, and I always like to make sure that I'm always hammering on it so that it will become part and parcel of you. Now, for price to move from this high to this low, you don't just move like this. If it moves like it becomes obvious, a lot of persons should be driving Lambo. So what price will do is, price will do what? We take a market structure movement, lower low, lower high, lower low, lower high, lower low, lower high. Now, the problem is that a lot of retail traders don't understand the importance of key level. Now, they don't even look at that, they don't even consider that there is a key level here, probably key level here that price could be reacting from. So what they usually do is that they will still be looking for sell here, not knowing that price have hit a higher time frame key level and there could be possible reversal. So you will see that price will begin to do what? It could consolidate for a longer time and then start to do what? Shoot up. So that was what happens on Euro GDP. And we don't just buy when price or sell when price come to a key level. There has to be a harmonic pattern alignment for us to buy or sell. And during the mentorship, we are going to expose you guys towards to the harmonic patterns we have, so that you begin to understand how we align harmonic patterns with key level. So what we are doing on this live is to understand trade that has played out in the past and the ones that are coming in the future, and what makes up those, the component that makes up those trades. Okay, so for Euro GDP, it is the same concept, because if you have watched the YouTube video on key level, I talked about higher time frame key level and specifically daily key level of what? Order block and fair value gap, rejection week. If you look close, you can find out that this is daily key level of what? Order block. This is the daily key level of order block. Why is it the order block? Because it has a fair value gap before it. And this is the last candle and it has a fair value gap before. And I said that for valid order block, it has to have what? An order of fair value gap before or after it. You can go and rewatch that video on YouTube. It's still available. So this is what? A key level, and it's valid. So you have already identified this key level in the future. Price have not even come to that key level, but you have already identified it. You've probably on weekend, Saturday, Sunday, you go to the market, you start identifying potential key levels, and then when you have learned about harmonic patterns, you begin to see if there is a potential harmonic pattern that is in alignment with any of the words key levels.
That key level, okay.
Yes, exactly. So now, because we have a key level here, so what I did was to check on the lower time frame to see if there is a potential harmonic pattern that is in alignment with this key level. So when people are looking for where to enter the market, you've already, because of the knowledge you have about harmonic, you already know the point, the Fibonacci level you are looking to do what? To trade. And when you have a higher probability trade is when the harmonic pattern measurement aligns. You cannot come down to the 4-hour time frame and begin to do what? Begin to adjust. You know, you can only
refine. Okay.
You begin to refine. You can only refine what is existing. You cannot refine what is not existing. You understand? Exactly. So you can only refine what is existing. So it's only when there is a key level on the daily time frame you can begin to refine them on the what? On the lower time frame. Please do not make the mistake of identifying a valid key level on 1-hour time frame and then begin to go to the daily time frame and see. No, it doesn't work that way. It has to be valid over there before you do what? To refine. So when you refine that, then what happened is that I was able to identify a harmonic pattern that is in alignment with this particular what? Key level, and it was very simple, very beautiful. This is what we call a valid what? Shark pattern. A shark pattern of what? 0.886. A shark pattern of 0.886. Okay, so that was where the trade was executed. And when I executed this trade, it took a great deal of time. First of all, it pushed all the way up and then it came down for a very long time before shooting up on Friday when everybody has already given up on the trade. That was when price moved. So this is just one piece of the puzzle. There are so many other trades that you can actually look at for. So this week, for this week, let me start from Apple. I'm looking at this Apple. This is Apple stock. I'm looking at this Apple stock this week. So I'm looking at buying Apple stock from here as market opens. The same thing I told you guys. What? Valid what? Key level, right? We have a valid key level of what? Order block, right? Because there is a fair value
That's
gap.
our. Can you go back to the daily?
Oh yeah. So
You showing the 1 of our. Can you
go
check it on daily first?
the same thing. So we have this gap here. So this gap is a fair value gap, and this is the what? The what do you call it? This is the what? The order block. Okay, and this order block broke structure, right? And if you look very well, you can see that this is also a key level of what? Order block right here. This is also a key level of order block right here, right? A key level of what? Order block. And when price came here, for that time, there was also a valid harmonic pattern that was in alignment here. And one good thing about harmonic pattern is that it keeps you, it helps you to be able to, it's where you are placing your stop loss, it gives price enough room to move, because you're not just placing your stop loss anywhere in the market. Now for this trade, you will know that if you put your Fibonacci level here from this origin to this high, you've already gotten the measurement of this retracement and the potential measurement here. Let me see if I can hide this particular one. Good. Okay, so you've gotten this, and this is the what? This is the key level, right? Good. This is the key level. Now look at this shape. I'm even introducing you guys to harmonic pattern right now. Look at this shape. When you see this shape like this, we're going to use Fibonacci to measure this shape anyway. But when you have something like this, okay, and there is a potential key level here, and you have this type of shape, when you look at a football, when you look at the ball, it's spherical. When you look at rectangle, it's in four corner shape. When you look at triangle, all those shapes, it has been embedded into your memory. So even when you wake up, whenever they call you up to identify this particular shape, you can easily identify it, right? Because of what you have, you've been able to understand the shape. It has become something that you can all easily do what? Remember, right? So that is how it is with harmonic patterns. So when you begin to identify these harmonic patterns, it will become part of you, and then you'll be able to do what? Keep identifying them every time, and it becomes something that is easy. So that is one thing about harmonic patterns. It is embedded into your memory, and you can never forget it. And one good thing is that it does not change. It is just like the way 1 does not change for generation to generation, 2 does not change. That is how these things are. It doesn't change. So, and it's something that if you want to trade any asset, you can trade any asset with the same word strategy. You can see I have a potential setup now on Apple stock. I also have something on BTC. I have something on currency pairs. I have something on all these different assets, because the same strategy apply across different assets. So that is how it is. So now you have this, you take your measurement from this point to this point to get. So that was how we're able to identify this potential valid shark pattern, because of the measurement and because of the what of the pattern. Now one thing is that this is what, this is one candle, this is one huge bearish candle. So at the close of that candle is the completion of the pattern. Okay, so now you will be taking your entry from here. If you want to do aggressive, you don't want to wait for confirmation. I'm going to teach you guys about confirmation during the mentorship, right? So now you'll be taking your entry from here, and where I'm going to be placing your stop loss is 5% distance from the what potential reversal zone, from this point, from this key level. 5% tolerance, that is 5% gap from this key level. And to do that, I'll teach you guys how to set up your Fibonacci levels. We're going to teach about Fibonacci during the mentorship. Okay, oh please, 1 minute. I think they just took the light. Sorry, but let me just switch to solar. Okay, 1 minute, I'm coming.
Okay. Yeah, thank you. Okay.
Okay, sorry about that. Sorry, here in Nigeria, we don't always we don't always know when they will take the lights. Sorry about that. So now we have a key level, and then we have a harmonic pattern into that key level. So what we do is we wait for price to get to this point. Now you can see that this is the 5%. So this is where your stop loss is going to be. I don't know if this is bold. Let me just increase the boldness so that I can see it. Hope you guys can see the levels. So this is where your stop loss is going to be. So until price takes you out of here, you are still in the trade, right? And then your final target is at this at this level. Okay, so that is well understood. So that is how it is. Now for this particular one, I'll be waiting to see what market we do. So this is what I have for this week on Apple. I have this potential setup on Apple. So and the key level is clean, is very clean, and let's see if this will hold. So please take note of that. And then also this particular trade on Euro AUD, I didn't share this to the community because this trade could take about 3 or 4 or 5 months. This trade is going to take about 2 or 3 or 5 months if it's going to hold. If it's going to hold, it's going to take so many weeks. It's going to take a lot of time. So it's always advisable to use a swap free account. So we'll be talking about brokers and account types and the pro firms during the mentorship, so you know the type of account you should be using as a money pattern trader.
Okay. Okay.
Yeah, so that you'll not be paying swap fees, because you'll be holding trade for a longer time for some swings, except you're having a trade on probably on 15 minutes time frame that will take like 1 or 2 days. But if it's going to be a swing, it's not always good for it, because at the end of the day you see that your swap could actually be eaten into your profit. So that is one thing about. So this is what we call a bullish bat pattern. Okay, the key level was clean, and the key level broke structure to the upside. So the only reason why we should be looking for buy here is because this low broke a high, and we have a potential harmonic pattern into that key level. Right now we should also be careful of this valid order block here, this valid key level here on the daily time frame. Okay, so price could react from this now, but the momentum that price used to enter this key level is also something that we can also help us to hold our buy position, because this is a huge momentum into this key level, right? So there could be, price could actually push back into this point, because this is a break of structure. So price could push back into this point and begin to do what to go. So I'm still holding this buy position. I didn't share it to the community because it's going to take a lot of time. So and not everything I share on the WhatsApp group, because it's not everybody is trading harmonic that is there. So I don't want situations where people will be taking unnecessary losses because you don't understand how I trade on how harmonic work. Okay, so that is that on that. Now GDP was a very beautiful trade last week. Multiple trade. You can see all of them. Multiple trade on the lower time frame. This buy was clean, valid key level, valid sharp pattern into this key level, so to the downside, valid key level, valid sharp pattern into this key level, bought to the upside. Right now, so we are looking at this key level also, and I don't know if price could we get there, but I hope it might get there or it may not get there, so we don't really know. But we're looking at this key level. I'm looking at this key level right here, and this is what we'll call a deep crab. Okay, this is what we call a deep crab of 886 1.618. You're going to learn about how to take all these measurements, and then also we have harmonic pattern indicator and software, so it's not going to be a problem for you. So you have something that will help you, because you have the harmonic pattern indicator that will help you to keep track of so many things here. So in case you want a kind of inspiration, or you want to look at valid setups, you can use the harmonic pattern indicator, which we are going to show you how to install it and how to use it. So this is what I'm looking at for on Euro GDP. Okay, so JP255 this week, I'm also looking at for this. I gave out this signal that was last 2 weeks, and it played out. We took partial profit, price came back into entry, but I'm not looking at to buy again from here, because this key level has already been mitigated. Mitigation is when price have already tested that key level for the first time. It means that price have mitigated that key level, so that is the meaning of mitigation. So this key level has mitigated. I'm not looking at to buy again from this key level. However, I'll be looking to buy from this key level, because right now there is nowhere to enter sell here. Say price begin to go up again, but I'm looking to see, this is going to be a very sweet setup. This is an extended sharp pattern of 1.13 that aligns perfectly with this key level of what other block. Can see how perfect it is. So I'll be expecting price to push into this key level and give us confirmation for a buy to the upside. So this is what I'm looking at for. You can see this one happened in the past. The same thing happened here also, right? A valid key level. This is what we call a Gartley pattern of 0.886, and it was a very sweet setup. One thing about harmonic is that sometimes, if you like, what happened to me was that when I started doing harmonic newly, I was jumping from one strategy to another. So what happened is that if I come back to harmonic, and then I'll see trade that played out, right? I was like, hi, how do you mean I stick with harmonic? I would have even caught all this trade. That was like 2 years ago or so. So I said no, I'm gonna stick to harmonic, because that regret you will have when you don't partake in the trade, it will always hurt you. So it's better for you to stick, because at the end of the day, if you leave it and then you come back and then begin to see trade that played out without you, you will not really feel happy. So that is one thing about harmonics. Okay, so that is that on JP225. That's JP225, and we have talked about Apple, we have talked about Euro GDP, we have talked about Euro AUD. Then we have German 14 index. This German 14 index, I'm also looking at for a buy opportunity, probably towards next month, April, probably before price will push to this key level, maybe towards the end of this, next week into April. I'll be looking out for a buy from this key level. So that is that on German 40 index. This is what we'll call a bullish sharp pattern. Okay, and this is a valid key level. You can see how clean this key level is. Very clean. Price could react from there, and then we'll have a harmonic pattern into that key level. Very sweet. So that is that on that. Now I've talked about Euro GDP also. Then the next one I want to talk about is USD JPY. Now for USD JPY, this is going to be a kind of is going to be something that we let us know if we'll be looking out for potential sells on the lower time frame, because this is a higher time frame setup. So this type of setup just with Euro AUD is the same thing with Euro AUD, because it's going to take like several months for you to achieve full target. So it's not something that will be taking trade today and be checking it tomorrow. So because of that, if this establishes, whenever this guy establishes, we can now come down to the lower time frame and start to look at for potential sell opportunity. That, just like what happened here previously. Let me see if I can get that. Let me see if I can get, yeah, good. Just like what happened here. I shared this setup with the guys last year, when we are still active on the Telegram. I shared this just as we are doing this live. That same thing that happened that day. I shared this setup with them, and finally it played out. But a lot of persons, even me too, we got a lot of entries on the 1 hour time frame. So many entries on the 1 hour time frame. We got so many, about 2 or 3 or 4 entries on the 1 hour time frame. Okay, so we got so many entries here. We call this sell, we call this buy, we call this buy, we caught this buy is a sharp pattern, very beautiful sharp pattern that happened here. We caught this buy, and so many setup we had on the lower time frame before price finally. We also caught this buy as well. Yeah, we call this buy. This is what we call a Gately pattern. I think it was from here. Yeah, a Gately pattern of 0.886. You can see how easy it is for me to identify all of these things because I have been trading it for a very long time. So we have this key level here. We have this key level here, and don't worry, when you get to maybe the final stage of the mentorship, you begin to go to the chart and identify all of this with your naked eye. So I'll be looking out for reaction on that key level. A lot of persons, I was seeing so many things online, a lot of people posting so many things. I was like, USJPY, if it's going to sell, it's not ready yet until we test this key level. But let's see what happens. If price does not test this key level and gives us a valid order block on daily time frame, then we'll be looking out for sell. But for now, I'll still expect price to test that key level and give us reaction for a potential sell. So the last one I have for today is BTC and Ethereum. For BTC and Ethereum, I have been trading BTC and Ethereum for a very long time. You can see these are past trade. These are past trade. We have so many of them that happened on previously. So it's something I've been doing for a very long time. So this is a setup I have on BTC for now. I'm looking at for this. This was a very sweet setup here, a valid key level, and price broke through to the upside. Just like they call this one a textbook setup. A textbook because it ticks all the whole boxes, right? We have a break of structure to the upside. So why should we buy from this key level? Because this low broke a high. That's the first question you need to ask yourself. Why should I even buy or sell from a particular key level? Because that particular key level broke a high. So that is the reason why we should do what? Buy or sell from there. So now this is a setup I have on BTC. Okay, you can look at it very well and then probably go back to your chart and replicate it and wait for confirmation here for a buy to the upside. This is the only setup I have. Now for Ethereum, I have this swing setup on Ethereum that is happening on the daily time frame. In fact, this particular one, before we even look at it, let's look at what happened here on Ethereum. Let's look at what happened here on Ethereum. Yes, I think it was this particular one. Let me see. Don't know why it's not showing very well. Okay, I think I have deleted it. I've deleted it, and fortunately I removed it. Unfortunately, okay, I've seen it. Good. So in case you want to doubt whether it's going to hold or not, let's look at what happened in the past. Now look at what happened in the past. In fact, I even closed here, but I was supposed to hold to 786. Even I was supposed to hold to 786, which is this point, because we're expecting a break of structure to the upside, so you can even increase your target. But however, look at what happened here. This is what we call a bullish crab pattern, and this was a valid key level that price came to test and gave us this particular setup. Now don't think that this same thing cannot still happen here, because we have a key level here. I'm rounding up after now. If you have questions, you ask before I close. So this is a valid key level, right? This key level is visible to everyone. It's visible to everyone, so everybody can see the key level. Very visible, right? Very clean, very clean. And we have gotten a reaction, right? So now I was able to identify a potential harmonic pattern into that key level, and that is what we call a valid alternate bat. An alternate bat of 1.13, Look at it. 1.13. Look at how precise that is.
Wow. Wow. The reason why I like this your method is because it gives room for person to get engaged with other things. Unlike the other one that you have to be glued to the screen.
You
like
have to
just
exactly. Honestly,
your stuff.
see, I have traded so many strategies. I have traded so many strategies. You have to move from 1 minute time frame to 5 minutes time frame. You wait for you. Yeah, so many.
Crazy.
It's crazy. It's a lot of work.
So for that reason alone, man, I can just look at my daily power minimum and put it in there and go and be doing my normal thing.
Exactly. You have time for other things.
Oh God.
Exactly. So
this is one I'm not doing. I pay so much money for different training to follow it up to 5 minutes, 15 minutes. They don't have that time.
It's a lot of.
So at the end of the day, like money being wasted.
Exactly.
Searching, paying mentor.
No, honestly, you're not alone. I experienced it as well. It's a lot of work.
It's easy to when they show you, this thing is believable, it's workable. But for you to not practicalize it, you don't have that time to stay up monitoring 5-15 minutes for your whole day. Where's the time?
Exactly. It's very exhausting.
I don't like that the lecturers don't know what they're doing.
Exactly.
You cannot implement what they taught you because you don't have the time to do it.
Exactly.
Like they do have.
That's true. So it's very exhausting.
I really want to understand
very exhausting. Very exhausting. So when you understand, like if you come and they say, okay, can you identify this shape? You say, this is a triangle.
Yeah, she's talking. Somebody's talking.
Okay. Good. I will be expecting you to talk since now.
Sorry, I've been using the earphone.
Okay.
I've been using the earphone.
Okay, you're welcome.
It doesn't translate it.
Okay, you're welcome.
So speak out because it comes from you.
Okay,
so I'm even surprised too.
Okay, you're welcome.
So my question is, so trade harmonics, that means one need a good computer then. Because for you to hold trade, at least minimum of for you to hold a trade in harmonics, your minimum stop loss should be about $50. What do you think, sir?
Okay, when it comes to stop loss and stop loss and money, it's all about the currency pair or the asset you are trading. It's all about the asset you are trading, okay, and it's all about the account size you have, right? So, for instance, if you are trading anything like normal currency pairs like Euro GDP, USD CAD, Euro USD, GDP USD, you can keep a stop loss of, let's say, 30 pips and still risk about $10 to $15 on a trade. I have done it in the past and it's very, very beautiful. Okay, so and also it also depends on whether it's a swing setup or a day trading setup. For instance, this particular setup on CHF, is this CHF or Euro GDP? Yeah, Euro GDP. This particular setup on Euro GDP that happened last week. These setups that happened last week, which I caught, these ones, I think my time is almost over. Let me see if I can round up. These ones, I don't need to use 30 or 50 pips or higher pips because the setup is a lower time frame setup, right? You can see these ones. It's a lower time frame setup. So with $10 to $15, you can set a stop loss. So you can only consider maybe risking huge if it's a swing setup. But if it's a day trading setup, you don't need to risk that. For instance, let's look at this particular trade now on Euro. Let's practicalize this. Now this is 21 pips. Okay, this is what 21 pips, and with 21 pips with $50 account, you can confidently risk $6 to $5 with 0.01 loss size, 0.02 loss size, which can risk like $10 on this trade. So if you have a lower capital, you can go for a 1 hour harmonic patterns. You can use the indicator to search for 1 hour, 15 minutes harmonic patterns and make sure that you have a valid key level and the key level broke structure before you, because of course before you can start using, just like someone that is trying to learn how to drive, before you start learning how to drive, it's always good for you to understand the components of the car or whatever you're driving, understand how to use it, know how to apply it. Before you start using indicator, at least it's always advisable for you to understand how the indicator works or how to do it manually. Understand how to do it manually first of all, so that if the indicator is giving you a wrong signal, you can easily tell, say, oh, this is a wrong, just like this particular signal now that the indicator is giving us, this is a very wrong signal, this is not a valid setup. Because of what? You've understand how to do it manually. So that is the essence of it. So if you have a lower capital, you can trade lower time frame, but if you have a higher capital or probably a profit account, you can trade higher time frame. Okay.
But no profit account accept all those overnight trades that you can keep overnight. Otherwise, they'll just close you out. So one have to be specific.
Exactly. So I'll give my recommendation.
Have to select.
Exactly. So I'll give my recommendation. Like the one I'm using, if they allow you to hold trade for a longer time. And
so for somebody with a small capital, that would be an advisable option to go.
You use the money and buy the account, so they can be able
buy
to
a prop firm and to trade well.
Good. So because that one you have access to, not only that, you also have option for a swap free. They call it a Muslim account. Like you don't earn interest on the trade, and also you don't pay for swap. Because if you are paying for swap, for instance, if you're trading BTC or you're trading gold and you're paying for swap will eat all your profit. It will eat all your profit. Wednesday swap will eat all your profit. So you have option to select a swap free account and a prop firm account. So I'll give my recommendation during the training. Probably that should be on third week of the training when we're talking about brokers and type of accounts. I'll give my recommendations on the type of prop firm you should go for. We practical, because the mentorship is going to be a practical mentorship. It's not going to be theory. You'll be doing it with your laptop. You will go to the website, sign up. Everything is practical. So it's not a theory. So we're doing it alongside with. You say?
How about someone that does not? Can we not manage along?
You don't have a laptop?
Without a laptop. Yeah.
Okay. If you don't have a laptop, you can have. If you have a probably mobile phone or a tab, I will advise you to use a tab if you don't have a laptop, so you can easily, because harmonic, you need to be able to see the structure very well, right? So even though the indicator you can use the indicator on the mobile phone, but if you have a kind of a laptop, please try and get a laptop, even if you need to borrow. Can you hear me?
Okay.
Yeah, even if you need to borrow, try and get a laptop. Very, very important. So is there another question, because I'm rounding up? Yes. So you can be using the indicator right now and be using, but hope everybody understand key level right now. Hope you guys understand key level very well. Is anybody having issue with key level?
Yes, sir.
Hope everybody understand key level very well.
No, my
right?
question is how to the Fibonacci relation harmonic patterns.
Yeah, we'll come to that. We'll come to that during the mentorship, because I want to make sure that I take it gradually so that I won't jump step, right? Because if I enter it now, it's an advanced concept, so I don't want to rush it so that you not get overwhelmed. So during the mentorship, we'll first of all talk about how price move, like the structural component of movement on price. They will look at key levels. We'll talk about key levels, just to do like a refresh of key levels. They will look at into Fibonacci extension, retracement, and projection. So we'll look at Fibonacci levels and how it correlates with what harmonic pattern, so that you'll be able to understand that whenever you see a shape of this form, probably price make higher high, higher low, higher high, higher low, and then does something like this, you can confidently know your origin, know your retracement, and know your extension. That's are the three things you need to know: your origin, your retracement, and your extension. If you can understand these three things, you are good to go. And one good thing about harmonic is that this Fibonacci measurement or these Fibonacci numbers, they are not adjustable. They are not something that changes. 1 + 1 is equals to 2 anywhere, anytime. It does not change. That is the same thing with harmonic Fibonacci levels. They don't change. A bat of 0.886 is still the bat of 0.886 in the next 10, 20, 30 years to come. Okay, a shark of 1.13 is going to be a shark of 1.13 in the next 20, 30 years to come. It does not change. Okay, so you can see how I'm even using my head exactly to be calling these numbers with my head, because it does not change. That is what's sweet thing about mathematics. Sorry if you don't like mathematics, but then it is what it is. So it is what it is.
That explains is clear.
Exactly.
So the next question will be the indicators don't only draw a completed pattern, not give one a projection of where the pattern will go. So that challenge will not make me use the indicator and be comfortable with it, because you cannot project, oh, this is where the price is expected to land to give
for instance,
this pattern. You only give pattern of where price has moved away from.
Exactly. For instance, there's a particular setup I have on copper, right? Sorry, I love trading so many assets. There's a particular setup I have on copper.
Trade everything.
Because
everything.
Yes, I trade pairs that are volatile, and I'm gonna do my recommendation of asset during the mentorship. Okay, so it's not gonna be a problem. Good. Now look at this projection. Now this is like 1 or 2 months projection of price, right? This is what 1 or 2 months projection of price. I'm even going far. Let's look at what happened on which pair. It should be USDJ. No, not this particular one. Let's look at what happened on Euro GDP. This setup, it was a very crazy one. In fact, I don't know. Okay, those of them that are on the WhatsApp group, they are not here with us. This setup, price was here, right? Price was here when I identified this particular setup. Let me just see if I can use the replay tool. After now, we are going to close so that we can go and do other things. Yeah, good. So price was here. Hope you guys can see my screen, right?
Very clear.
Good. So price was here when I identified this key level and this potential harmonic pattern. Now this is a classic. My God, this was a classic bullish bat pattern. Everything was clicked. We had a key level that broke structure to the upside. That gave us a reason for us to look out for a buy from that key level. And then not only that, we have a potential. In fact, this key level started from the weekly. Okay, we had what? A bat pattern of 0.886, right? So let me increase that for you guys. We're almost over. A bat pattern of what? 0.886, right? You can see. Okay, so because of that, what do? We place our entry here just few pips above, so that sometimes if you're using a swap, if you're using a kind of a large account, you can easily be able to do what? Get triggered. Exactly. Because your broker will first of all charge you for spread. Exactly. They will first of all charge you for spread before, allowing you to trade. So that is one thing about that. Now, because of that, so we place our entry here, and our target, of course, we're going to talk about targets, of course. We're going to talk about target also, so that you guys understand target and how it is done. Let me see. I don't know what happened again. Sorry. I'm not used to this. What do you call it? I'm not used to this Google Meet. I'm not used to this Google Meet. I just hope you guys can see my screen, right?
Yes.
Good.
Yes.
Good. So now you place your entry there. Then what happened? Price came right there. Okay, let me see if I can play the. Okay, let me see if that will play. Don't know. Okay, good. Okay, let me increase a little bit to 1. Okay, so let's just watch what happened. In fact, I experimented something. I said, I told myself, let me know if price obeys key level. Do you know what I did? When price got to, let me do something. Good. When price got here, I took an entry and I placed my stop loss here. And my fiance was with me. I told her that, babe, I'm trying to experiment something. I want to know if I risk small money, whether price will take me out. So what I did was I risked a small amount of money here because of this movement. In fact, this particular bullish candle broke the structure to the upside on the lower time frame. It was a clear market structure shift on the lower time frame. So I took my entry here. Mind you, this key level was still here and this pattern has not completed, right? So but I want to know if price really obeys key level. See what happened. I won't forget that day. See what happened. It took me out, and guess what? That was the end of it. He never came back there again. He never came back there again, and that was the end of it. That was the end of it. So just imagine that you have already identified this setup, like, you know, 1 or 2 weeks before the time. That is one beauty thing about learning how to do harmonic pattern manually, because if you're using indicator will only show you pattern that have completed. It will not give you a projection into future setup.
Yeah.
So that is one thing about it. So let's look at what happens on Euro GDP. If price, I'm expecting price to react from this key level here. I'm expecting price to react from here. So whatever price does here will let us know if we're going to see a push to the upside or probably a push to the downside. So let's see what happens. If price can come back into this origin, we can look for more buy to the upside. But for now, there is no entry on Euro GDP for now. So I'm going to draw the curtain for today here, and I hope you guys have gotten a lot of value from this section. Is there any other further questions so that I can end this live?
Yes. One last question from me. The different harmonic patterns, do they go with different Fibonacci level?
Exactly. Just like somebody that is plus size. Somebody that is plus size cannot wear a tight clothes. It will not fit the person.
Okay.
If you're driving Mercedes Benz, you cannot use a Toyota tire to put inside Mercedes Benz, or you cannot use different engine for different car. So each one has its specific stop loss level and specific measurement and specific target level. Okay. Yeah. So that is one thing about it. So that is it.
Wow.
All right.
So
good. So we're going to start mentorship by next month. For those of you that have not signed up, you can still sign up. 50% discount still applies because it's once in a year, because it's going to be a lot of time and work and effort to teach everything from the ground up. So if you have not signed up, you can sign up, and let's see what happens this week. So wish to see what happens this week, and let's see how it goes. Okay. And I'm going to share the setups on the WhatsApp group for you guys to see, and then let's see what happens. Okay, so I wish you guys all the best. I wish you all a profitable week, and I wish you guys all the best this week. And if you have any questions, if you have any issues, please, my line is still open. You can contact me, you can reach out to me. So this will be all for now, guys. I wish you guys all the best, and bye for now. Have a wonderful evening and have a wonderful day. Bye for now.
Thank you.
Bye.
All right, bye. Oh my God.